How's our Friday going, folks? Don't have too many of these Fridays left where you're going to be sitting in class at 9:30 a.m. Yeah, future you're going to be at work and you've already been working for a few hours by that time. Yeah, I'm really I'm doing a woe is me act right now because I've got yesterday morning I had 3 hours of meetings from 8 a.m. till 11 a.m. And then I had another meeting at 3, which you guys know how I feel about meetings. So that's kind of good. I had another meeting this morning from 8 to 9, which I had to be up for, and taking notes. I couldn't just sit there like a lump on a log like I like to during meetings. I had to actually be engaged and involved. And that's going to be kind of a trend for the next few weeks is that I'm going to have meetings kind of peppering my schedule, which this is kind of the point where I check out and I'm just kind of like, all right, students are doing all the work. I'm just sitting there nodding my head. But I'm going to have to actually be engaged and involved in things, which I'm not happy about. Plus, I had to wake up at 6 a.m. today, guys. You know what that's like? Like, yeah, we do that every day, Dr. Martin. Like, if you're one of those people that's one of those early in the morning thinkers, I don't know how you do it. You have my sincere admiration because waking up at 6, like I have to have a really loud alarm clock, and then I have to make sure that it goes off. Actually, when I was back at OU, I thought I was a pretty bad about sleeping through alarms. It's not that I didn't hear the alarm. I would just naturally hit snooze and just snooze and snooze and snooze. I had a roommate who had the loudest alarm clock in all human history. Like if it went off right now in Oklahoma, we would hear it here. And somehow he would actually manage to just kind of just sleep through it. And it got so annoying that my room was next to it. It was generally I didn't hear the activity that was going on in his room, but that alarm clock was ridiculous. It would just go off and he would just ignore it. Finally, I have to open his door and yell at him. Even that didn't work sometimes. Sleep through my yelling at him. So things got violent. And that's why we're no longer roommates. Anyway, that and it was like 30 years ago. But yeah, all right. So we got some CPA prep to do today, and so we're starting to get to some nuanced areas of this. I apologize in advance. I didn't have my chance to do my preparation. I should be able to talk about this, but I planned on doing some advanced prep, and I got caught up in some stuff, mostly because meetings, like I said this morning. But it seems like I'm a little bit stumbly today. It's just because one, I'm still working on my coffee, and two, I am not as well prepared for class. That's a disclaimer. Hopefully you'll be able to forgive me for that one. I do know the answer to this first question though. Which of the following is true when comparing a compilation engagement and a review engagement for a non-issuer? So we're getting into attestation questions. And first part of this section, actually I think this is the first part of module 6 that we're talking about today. We're going to finish on module 6 on Friday, and I'm sorry, next Friday. I think I just said attestation too. Wow, I'm really off. It's assurance, okay? Mary, why didn't you correct me on that one? Why didn't you yell at me and tell me how? So yeah. All right, so we're on assurance actually, SSARS. And so we talked about assurance engagements already in 417, but we need to reflect on this. So remember there's 3 types of assurance engagement, broadly speaking, we talked about in 417. Talked about preparation, compilation, and reviews. And these are all relative to financial statements. Now, is that the scale of all types of assurance engagements? The answer is no. This is an area where the ACCT tends to have very heavy focus. So preparation is basically making financial statements, preparing financial statements in accordance with a specified reporting framework, which we've talked about those specified reporting frameworks. The one that we tend to operate through most of our situations is what in this university. Yeah, generally accepted accounting principles. That's not the exclusive only one, but that's the one that we're usually going to fall into. Now, compilations are a little bit different. They can still actually have specified reporting frameworks, but a compilation is a little bit more complex and nuanced. That's where we're taking in management representations into our compilation of financial statements. So we put together the financial statements and management says, here's how we estimate this particular item. This is how you should calculate it for our purposes. So there's a management representations made with respect to compilations. And then we have reviews. Reviews are just basically like mini audits on financial statements. They're substantially less than scope, but they do have some similarities to audit, but some substantial difference as well. Now, what are some characteristics of each of these that we need to be aware of? Well, first of all, preparations are pretty easy. There's no report required. There's no opinion rendered, and independence is not required. So no attest function, no assurance function, and no independence required. Compilations are a little bit more challenging. There is a report issued, though no opinion is going to be issued. Type of opinion. And independence is kind of funky because independence is not required, But if you're not independent, you do have to disclose that in your reports. And then reviews, a report and an opinion is required, as well as independence is required under review engagements. By the way, does anybody remember? I think we talked about this already. The title, official title of an opinion issued under review. It's not the word opinion that they use. It's called something else. It's called a conclusion. It's called a conclusion. Now, why do they use the different terminology? I don't know, but it's going to be some of those things that's going to come up. So that's why I remind that. All right, so let's go through the answers. In a compilation, only limited assurance is provided, whereas in a review, positive assurance is provided. So neither of the statements are correct, and there's no assurance provided in a compilation. In a review, we have provided negative assurance or limited assurance. The compilations or reviews provide some form of assurance on financial statements. Again, compilations provide no assurance. And again, in this context, when we talk about assurance, we're talking about an opinion being rendered. That's kind of a key note for the CPA exam, something I kind of alluded to, but I should probably talk about. When you see the term whether or not attestation was provided, that means did they issue a report? When you see the term was assurance provided, did they issue an opinion? And there's no opinion rendered for compilations. Full stop. Both compilations and reviews require an establish and understanding of the client. That seems pretty reasonable. I think that's probably our answer. Last one. Negative assurance is expressed in a compilation, but a review, we're so close. If we just transpose compilation or review, would have been good. So C is our answer. C is our answer there. Which of the following engagements is considered a non-attest engagement? A non-attest engagement. Now, this one's a little bit confusing because if you said, all right, which one of these is not listed under SSAEs? Well, two of these are not listed in SSAEs as preparation and compilation, but that's not what it's asking. Again, the key to this question is understanding what do they mean by non-attest, and they're saying which one of these does not require a report to be issued. Okay, that's what they mean. Not which one of these are covered under SSAEs or not covered under SSAEs, but which one of these is a report not issued. That's kind of an interesting vernacular that they use. So we just talked about preparations. Preparations have no report, no opinion, no independence, or there's no independence required. There can be independence, but it's not required. So preparations are our answer here. For issuing a report on compilation of financial statements of a non-issuer, the accountant should do what? Okay. So compilation, again, compiling financial statements on behalf of the client based on their representations. That's basically all we really need to know about that. No testing, no opinion being provided. There's a report provided, but it just details the scope of procedures. So let's go to the answers. Apply analytic procedures to selected financial data discovered in material statements. Are we doing any testing as part of compilation? No. Okay, that's going to be a recurring theme. We're going to talk about the scope and nature of testing in some of these situations. Corroborate at least a sample of the assertions management is embodied in the financial statements. Are we providing any corroboration, any kind of proof? No. Okay. Inquire of all the client's personnel of the financial statements and to admit substantial disclosures. Again, we're talking about testing here, and we don't provide any procedures or testing. Read the financial statements, consider whether the financial statements are free from obvious material errors. That seems like a pretty good procedure. We're compiling the financial statements. We want to make sure that they're accurate. So that just seems like a good procedure. So D is the most obvious. Accountant has been engaged to compile the financial statements of a non-public entity. These financial statements contain many departures of GAAP because of inadequacies in the accounting records. Accountant believes a modification of the compilation report is not adequate to indicate the deficiencies. Under these circumstances, the accountant should do what? So this is an interesting question because we haven't really talked about this, and we're going to have to delve into the details. So first of all, we know that an opinion is not provided, only a report is provided. But that lack of an opinion is really, really critical because that's usually how we substantiate the scale and actions of any departures that we would observe. If that's the case, then we can issue a report, but we may not be able to issue a report given the constraints that we were operating under. Now, what does it sound like? We're talking about departures from GAAP from inadequate accounting records. Sounds like obviously departures from GAAP, but if you were actively engaged to compile the financial statements on behalf of the client and the accounting records did not enable you to do so, what is that closely akin to with respect to auditing context? In other words, you were assigned to do a job, but you couldn't do this job. What do we call that from an auditing context? Scope limitation. Okay, so how do we treat a scope limitation from a compilation perspective? And the answer is, of course, it depends, but it really depends on the scale and detail. In this part, we really couldn't do our job altogether. Now, if we were in an audit, we'd say disclaim an opinion and move out, but we're not doing an opinion anyway. There's no opinion being rendered. So we couldn't do our job, and basically that just is kind of what colors this detail. So we're looking for the answer that mostly says, because we can't do our job, what do we do? So let's just go through the answers. Informed management of the engagement can only proceed if distribution accounts report to be restricted to internal use. Well, that might be an appropriate solution if we thought that that was the case, that was going to be the case. But first of all, it's already restricted to distribution in some periods. Secondly, if it was originally intended for distribution for internal use, then it doesn't change the fact that we can't do our job. So A is a little bit suspect. I'm going to jump down to C. Quantify the effects of the departure from gap and describe the departures of gap in a special report. Okay. No, that doesn't really help because we couldn't put together the compilation in the first place because we didn't have all the information we needed. Obtained representation for management of financial statements will not be used to obtain credit from financial institutions. If they were being used for that point in the first place, then that's going to be something that is irrelevant to this particular procedure. So going up to B, withdraw from the engagement, provide no further service concerning these financial statements. That sounds like an extreme option, but if we can't issue an opinion where we're disclaiming an opinion, or we can't disclaim an opinion, that's really all that's left to us. That's really the only action that we have because we can't really do our job effectively. So unfortunately, B is going to be our best answer here. Again, in a pretty challenging context of the question, but we need to go to that. All right. Performing inquiry and analytic procedures is the primary basis for an accountant to issue a what? All right. This is an interesting one. So we're talking about testing. Now, you notice I'm not specifically saying audit testing. We do these types of tests in an audit, but in an audit, we do extensive testing just beyond this. But we talked about two specific types of tests here. And these are used exclusively, I want to say exclusively, these two types of tests are used in a specific engagement. Now they're used in audits, but in joint with other types of tests. But if we go to a different, substantially less than scale type of procedure, we do perform these types of tests in that type of engagement. We need to identify which engagement that is. So let's go through the answers. Report on compliance with the requirements for governing major federal assistance and programs in accordance with the Single Audit Act. So if we're talking about governmental engagements, usually a single audit act is performed in unison in conjunction with a governmental audit. So the answer would be here is that we would perform inquiry and analytical procedures, but it would not be our primary basis for the issuance of that report. Review report on prospective financial statements that present an entity's expected financial position given one or more hypothetical assumptions. So we're talking about prospective financial statements, which is going to be an SSAE report. Now, we're talking about what it is that we want to know with respect to the report. This could be a possible answer because this is a review report, which is appropriate to use inquiry and analytical procedures. But I think that there's a better answer here. So we're going to put a pin in B. There's a possibility here, but let's just go ahead and move on. Management advisory report prepared at the request of a client's audit committee. There's no real reason to actually provide any type of testing work. We're talking about management. I'm looking at a management issue a management advisory report. And then review report on comparative financial statements options for an issue, non-issuer in the second year of operations. This one is a little bit more clean and clear. We do have clear audit evidence because it's based on historical financial statements, as opposed to B, which is a review report based on prospective financial statements. Could we perform inquiry and analytic procedures? Yes, but it would be very, very challenging to do a review report on that. We're talking about that. For a D, for review report on comparative financial statements based on a historical basis, it's going to be a lot more illustrative and clear. So D is going to be our answer. Which of the following procedures should an accountant perform during engagement to review the financial statements of a non-issuer? All right, so we're talking about what are we going to do as part of an engagement for a review? Now, this one is going to be kind of eliminating the things that we don't do as part of a review. So let's read through. Communicating significant deficiencies discovered during the assessment of control risk. Okay, so in a review engagement under SSARS, what is the auditor's responsibility for testing internal controls? Not really quiet in the room. I wasn't expecting to ask that question. So that's fair. That's fair. There is no responsibility for testing internal controls under a review engagement. So we wouldn't identify significant deficiencies as part of that. All right, so no testing of internal controls. Obtaining a client representation letter from members of management. So representation letter, that's basically saying this is what we did for you over the course of the engagement. We've talked about representation letters before. Seems like a good approach. That's probably going to be our answer, but let's go through the rest. Send a bank confirmation letters to the entity's financial institutions. All right, review engagements. We performed two types of tests. Which two are they? I'll give you a hint. They were listed in the previous question. I'll give you a hint. They were listed in the previous question. Inquiry, analytical procedures. Yes. Okay. So inquiry and analytical procedures, which means confirmations would not be performed in a review engagement. Examining cash disbursements in the subsequent period for unreported liabilities. So Looks like we're doing inspection of records and documents in that situation. Do we do inspection of records and documents and inquiry? No, we only do inquiry and analytical procedures. Okay. Now, obviously, there would be some documents that are going to be representative, but for the most part, detailed document examination would not be part of that. So D would be out as well. So B is our clear answer there. Clear answer. In reviewing the financial statements of a non-issuer in accordance with statements on standards for accounting and review services, an accountant is required to modify the standard review report for which of the following matters. So this one's one of those ones that you had to have memorization. You had to do a little bit of notes. So usually there's only going to be 2 times where modifications occur. One of those is going to be for a departure from GAAP, a significant departure from GAAP. The other one's going to be if there's a going concern issue present. So keeping those in mind. All right. Inability to assess the risk of material misstatement due to fraud. Well, we don't consider fraud as part of a review engagement. It's going to be something maybe incidentally occurred, discovered, but it's not one of the objectives of the audit, unlike our objective of the review as opposed to the audit. I think I said audit twice, and I completely ignored the words audit in that. I was meant to say review. And then discovery of significant deficiencies in design and internal controls. What's our responsibility for internal controls under review? None. We don't test internal controls. Okay, so the answer is no and no, which gives us D. Okay. Then we have a task-based simulation, but we didn't have a spreadsheet. Did anybody miss the spreadsheet? Just a little bit sad, and just kind of like, I really want to have a spreadsheet. It means it's going to be a very wordy problem. Dr. Barnes got through it. Sometimes you got to do that, okay? So we've got basically a review of financial statements, and the staff associate prepared the draft report and has questions about the correct wording of the report relative to professional standards. And so I assist you with this. I gave you the AICPA blueprint for a task test to share report analysis on Brightspace. And basically all you had to do was fill in the blanks. So that's all we're going to do is fill in the blanks. Now, this you can ask, is this going to be something that we'd have to do in the CPA exam? Yeah, you probably would have to know what the particular language is, but that just comes getting familiarity with the details. So I'm going to read through and then we're going to stop and we're going to talk about what's included here. So we reviewed the accompanying balance sheets of Tucker Company as of December 31st, year one, the related statements of income, retained earnings, cash flows, then year. A review includes primarily blank. Okay. Now I'm going to move on, but we're going to come back to this. All right. Management's financial data and making inquiries of company's management. So it sounds like they're listing out the procedures that you would perform as part of review. The second one they listed was an inquiry. Remember, we talked about 2 types of procedures that are performed in review. What would logically be the other one? Analytical procedures. So the wording here is applying analytical procedures, which again, I know you're like, we just looked at the template, Dr. Barnes, and copied the wording. But the important context here is not that you can copy wording, but you can understand why that wording was present in the first place. All right, a review is substantially less in scope than an audit. Now, I do want to make a point of this. In the review report, they use this language very explicitly for a very intentional purpose. They're going to be talking about a review of substantially less in scope of the audit, and that wording has to be present in every review report because we're trying to limit the scale of responsibility that we have as the reviewer. All right. The objective which is to express an opinion of financial statement as a whole. Accordingly, we do not express such an opinion. Now, take a note here. This is not saying we do not express an opinion. They're saying we're not expressing an opinion based on the financial statements as a whole. Okay, we're not going to issue a statement saying financial statements are free from material misstatements. Instead, we're expressing something else that's much, much less substantial in scope. It's going to be that conclusion that we're going to get to here in just a second. All right. Management is responsible for what in the financial statements according with accounting principles is generally accepted in the United States of America. So we talked about this. This has not changed from our audit. All right. So if I were to ask you this question audit, then what is management responsible for with respect to financial statements? You'd probably say preparation and presentation. Yeah, and the wording here is preparation and fair presentation. So this is where you get to say, Dr. Barnes, you never told us the word fair, and that's just not fair. No pun intended. Right. And again, the vernacular is kind of important, but it's still the same thing we learned back in audit. And this includes the blank of internal control relevant to the design, preparation, and fair presentation of financial statements that are free from material misstatement, whether due to fraud or error. Now, again, we're not responsible for testing internal controls, but we do know management has a responsibility with respect to internal controls. So what is their responsibility? Well, they also have to create the internal controls, which what's the word for creation? Design, okay? Then they have to put those controls and design into place, which is going to be implementation. And then the controls, if they need to be fixed or they need to be updated, then we need to maintain them. So management has responsibility for design, implementation, and maintenance. Do they still use the Mr. Dim mnemonic in Becker? I can ask Jared too, since you're over there too. So Jared, why didn't you call me out when I was wrong earlier? Okay, I put all the responsibility just on Mary, and then you were just standing there, just kind of smiling. Okay, you're just too happy admiring your grandson. So, all right. So yeah, Mr. Dim. Okay, Mr. Dim. You know, major responsibility, design and implementation of maintenance. Not a necessarily highly leveraged mnemonic that Becker uses, but it can have its uses. All right. Our responsibility is to, and this one's one that you just need to know the language, is basically conduct the review engagements in accordance with, this one's one that you could actually infer from the context of this engagement. So what are the standards that actually dictate the conduct of a review engagement, specifically a review engagement to review the financial statements? We've only talked about one setting that's going to be appropriate. That's going to be statements on standards for accounting and review services. Now, I do want to make a reminder on this. Gets really, really confusing. We're talking about another type of review engagement where it's not on historical financial statements, then generally those are going to be statements on standards for attestation engagements. So a review is going to be an attestation engagement. We're talking about doing engagement on prospective financial statements or anything forward-looking like that, or anything else that's outside of the scope of financial statements. We're talking about historical financial statements, then they're going to be SSARs. Except, what if it's going to be a review of quarterly financial statements when the financial statements have been audited on an annual basis? Do we still use SARS? Jared, Mary, what do you think? Calling me a lot today. Say that again. So if we're doing a quarterly review of financial statements where the financial statements have been audited on an annual basis, do we still use SSARS? Okay, you shook your head the entire time. That's right. That's right. Good job. And so what would be the basis for the review then? It would be PCOB or SAS, depending on which was the framework we operated under the audit. But in this case, we've never mentioned anything about this. If it's going to be like an annual review, it's going to be less in scope of that audit. It's just going to be SSARS. Okay, that's all that we know. All right, what are these standards requires to provide and perform, obtain? So here's a hint here. We're talking about the type of assurance that's going to be provided. So obviously, if we're talking about assurance, it's going to be reasonable assurance, right? Everybody wrote down reasonable assurance, right? Only one person is negating me. It's like everybody else is just kind of like, he's saying reasonable assurance. I'm pretty sure he's wrong because I copied it from the report. What is the assurance level? What is the assurance level? Limited assurance, okay? What is another term for limited assurance? Negative assurance, okay? Negative assurance. So limited assurance, all right? The basic reporting. So what's the difference between limited assurance and positive assurance? Positive assurance says the financial statements are free from material misstatements. This one says we are not aware of any material modifications to be made. It's a less strong statement. Basically, it kind of reduces our accountability in this area because we did not perform as stringent testing under limited assurance. All right. So basic reporting, whether we make material modifications based on financial statements to be in accordance with accounting principles generally accepted in the United States of America, we believe the results and procedures provide a reasonable basis for our reports. Based on our review, we're not aware of any material modification that should be made to the accompanying financial statements in order for them to be in conformity with blank, generally accepted in the United States of America. This is kind of a letdown. This is like the easiest blank of the entire ones. Like you got through the really, really hard stuff and they have to answer this one. It says, what are those things that are generally accepted in the United States of America? Could have answered this question back in 220. Accounting principles? Yeah, generally accepted accounting principles. Wait a minute. Troy, didn't you also sit for the CPA, accounting section of the CPA exam?
Yeah, I let that fly under the radar.
Okay. So you could have been criticizing me as well. So I have three people in this room that could have tricked me in. And Cole's on Zoom and he didn't even pipe up. Okay. Pull out your pencils. I'm gonna do a quiz now. That's what I'm doing. We're gonna do our questions here. So before we get started, apparently there's a large, I think I told Trish, a large number of my auditing students are in Dr. Clarence's class nearby. They frequently hear me when I speak up with them. So at some point during this discussion, I will yell out and turn up girls really loud. As for the express purpose, not reinforcing it to you all, to just disrupt that class. All right. And you guys will be in on the joke, but, yeah, tell them about this. All right. So which of the following engagements may an accounting or practitioner perform when there is a lack of independence? Like we've seen this before. It's like we've talked about this before. So, first of all, attestation engagements under SSAEs. What is the requirements for independence for those engagements? There's independence required for attestation engagements? Yes, they are. For all the attestation forms, attestation engagements, they're required, okay? And then SSARSs, we have reviews, which are kind of highest level. Is independence required in a review? Yes. So it's going to be, we are left with preparation and compilations as no independence being required, all right? We don't have preparations listed up here, but we do have compilations listed, which is going to be our answer. Did anybody put in the answer the caveat with compilations and the independence requirements? So the caveat is, even though independence is not required, if you are not independent, you do have to disclose that information in the report. That's kind of the caveat there. And that's going to be something that might come up, so that's why we're to put in there. Okay. So which of the following procedures should an accountant perform during an engagement to review the financial statements of a non-issuer? All right, let's just go through the answers. Communicating significant deficiencies discovered during the assessment of control risk. What is it that we do not perform as a review test? Tests of what? Internal controls! Test of internal controls. That wasn't been laughing. Anyway, we don't perform test of internal controls over that. So, yeah, we don't perform test of controls over review engagements. Therefore, no, I'm laughing. So, yeah, so we go. No, A is not the answer. All right. Obtaining a written client representation letter from members of management. That was the right answer last time. It's still the right answer this time. Let's make sure we go through this again. Sending bank confirmation letters to the entity financial institutions. Doesn't matter how many times we say that we want to do other types of tests, we're still restricted to inquiry and analytic procedures. And which is kind of funny because you'd assume that if there's no internal controls testing, the confirmations would be fine. Everybody remember from 417 when I said confirmations are never used to test to control? It's kind of one of those things. Like, no, it's not. The other one's going to be appropriate. No test to controls, no confirmation. And examining cash disbursements and subsequent periods for reported liabilities. This is the exact same question from the oh my gosh. I'm really getting old. I could have sworn that I looked this up and I said, okay, this is a different question. That's the exact same question. So everybody should have had this one pretty easily. I'm telling you, that's where you know you're getting old. I'm gonna have to make a note of this, not to do it. All right. Have a good weekend. Don't fret too much about the senility of Dr. Barnes.